Good evening, guys. Welcome to another live chat here. We are talking NIO, of course. What else? Well, we also might cover a few other things, of course. But to start with, that's where we're going to get cracking. And then I imagine we're going to talk a little bit about the madness that is happening in the markets here and what's really going on. Let me just rejig my windows here slightly so I can see all your comments, guys. Good to have you all on the chat here. As always, lots of familiar faces here. Philco, welcome, one of our lovely members. Smash that like button, everyone. It's very kind of you, Philco, to remember that. Esteban, you're waiting for Felix to go. It's been a few days since I've last seen you. Good to have you on here. Wall Street God, Pop Rock, the Mackie, Mike, Esteban Jr. Lots of you guys. Funny Shoe. So yeah, fantastic to have you on here. So what are we going to talk about? Well, there is an update, and I've just actually recorded it as a video, but I thought I'd share it with you guys first because I think it is exciting. So what is the big excitement? Well, remember that story I was telling you about, that there would be a deal between NIO and Sinopec, and that would solve all our problems. Well, not quite all our problems, but it would solve NIO's problems in basically building battery swap stations. At the moment, they've built about 120 or so, and they're basically moaning that they can't find the space. Even if they do get the real estate, they then have to get permits from 5 different government agencies, and that the power companies are not particularly helpful. It all takes forever. And we want to get to 600 stations this year. That's what we are promised. And they are going to get there through Sinopec. Sinopec, if you don't know, if you missed that video, they own 33,000 petrol stations in the prime areas of all of China. Basically, the whole coastal area, they are the government monopoly for petrol stations. And you might remember this. I was sharing this with you guys a few days ago. This was a meeting here on the 12th of February. The right chap on the right is a Sinopec chairman, and they are standing next to a Sinopec petrol station. So far, you're thinking, why is he showing us a petrol station? Well, they have a battery swap station there. The old model, the new one, the car no longer gets raced, which is also exciting. And why is he standing there in the middle of Chinese New Year? You have the chairman of the world's largest refiner and the chairman of Sinopec, a massive state-owned organization. He's there. He gave up his holidays to be there and talk to NIO for this sort of press event. He looks very impressed, doesn't he? Well, I'm not so sure he was. But what is the news? They have met again. Just 10 days later, so on the 24th, just 2 days ago, and we have photos of it. Why do we have these strange photos of it? Well, they met at Sinopec's offices, and it seems they have a meeting room, and that meeting room is being filmed and projected into the lobby of the building. And you can see there William Lee standing there with, on the left, the Sinopec chairman. And there they are, they're again sitting in that meeting room. Now, what did they actually discuss? Well, first of all, it's a very short time period. I think within 10 days, you get William Lee there going to Sinopec and meeting the chairman a second time. Very hard to get meetings with these guys. These guys who run these enormous Chinese state-owned government agencies, companies. You can't just call up and say, hey, I'd like to meet the chairman. That's never going to happen. So there is something brewing there. Now, this is a Chinese article I translated. NIO was asked about this meeting because these pictures were sort of leaked. And they said, we have further confirmation of the news will have to wait. And that makes me actually feel quite positive on this, because I've been saying this now for some 2 weeks or so. I do think we are going to get that deal. Why are we going to get that deal? Well, one, it works for both parties. Everyone's a winner. Sinopec has this huge petrol station network, and they know petrol is getting phased out, or there will no longer be petrol in China, probably by, sometime in the, well, some people are saying as early as 2035. I think that might be a little bit early, but basically petrol use is going to go down. Only 65% of all new cars bought in 2025 will be ICEs. So it's just, the demand for that's going to decline. Secondly, the Chinese government wants to boost the EV sector, and they want to support the rollout of battery swap stations. That is actually a government policy, battery swapping. It isn't just some pie in the sky idea. And they are realizing this problem, and we had that EV100 conference was that early January? I can't quite remember. Anyway, we covered it. And basically the NIO, they went there and they said, guys, we need to help us. We all need to do this together. We are having, this problem here with a bottleneck in getting our battery swap stations out. And the government ministers were there and they were basically saying, we all need to work together to further the EV industry and make China the #1 in the world for EV technology and EV brands. And that's what they're doing. They are telling their state-owned petroleum company, fix it basically. And they can, because they've got space, right? There's lots of car parking spaces next to petrol stations, these Sinopec stations. You see how big they are. This gives you a bit of a feel for how big space there is around them, right? There it is in the background. There's a huge bit of land around it. You just need 4 car parking spaces to put up one of the new battery swap stations. So that's what we're seeing here. And also the media coverage here in China is saying, judging from the frequency of the meetings between the two parties and the level of personnel, and that just mean the seniority, because you just don't meet the chairman usually unless it's basically a done deal, in my view. I think this has been discussed at a lower level for some time, probably with government ministers also, and now they're having these high-end meetings to give everybody face and to actually agree and hammer this out. The cooperation between Weilai is the Chinese for NIO and Sinopec seems to be imperative, and it's only a matter of time before the cooperation is reached. And I agree with that. I mean, at the moment, we haven't got the confirmation, and I want to make that very clear, but I think that is going to come. And I'm having a slight hope that perhaps they're going to tell us this on Monday in the earnings call. Wouldn't that be a whopper of a news item to sort of throw in there? I think that'd be quite a nice one. And the second little bit of news here from that picture I showed you also a couple of days ago with William Lee here crouching in the 2.0 battery swap station is that you no longer have to lift the cars up. And that's a big advantage because that makes it much faster. It makes the whole thing mechanically easier to install. Also, you basically don't need to prop up the car any longer. So I think that's quite a good one there. And this article here just sums up, if the cooperation happens, then Sinopec's more than 30,000 gas stations across the country will solve 2 major problems of power station site selection and power station infrastructure construction for NIO in one full sweep. It only needs to introduce replacements on the basis of existing gas stations. And, gas stations are in the right places, right? All we need to do all around the world is put power chargers into all the gas stations and we're done. We don't need to worry about where to put it. We just need to get the gas stations to do it. And that's the Chinese government here, I think, doing exactly that. Jasper, you asked me here, what can I mean by red tape problems? Well, the red tape problems are, okay, at the moment, they need to rent a plot of land, right? And get agreement of the owner to put their battery swap station on there. Second, they then need to get basically building permits from apparently 5 different government bureaus. Now, I imagine that might be traffic related, that might be infrastructure, power related, there might be a building department, there might be other health and safety concerns. There are a lot of elements to that. And then they need to get the local power grid, the local power company to actually put in the power and agree to that and, install a meter for the power usage, all these things. Now, how do you solve that? Well, if you are a state-owned enterprise like Sinopec and you want more power, you get more power. You want a permit, you get the permit because you are part of the government. And if it's decided to do this, then it's government policy and therefore you haven't got any of these hurdles. But NIO is a private company and therefore they have to go through all these steps. So I think that's kind of really what it does here. So I think that's kind of an interesting one. Now, there's also something I wanted to look at here. So these are the pictures again, basically taken in the lobby of the Sinopec building because they have that screen up there and somebody snapped these photos. It could have been the receptionist or security guard or someone. Someone was excited by it and leaked it. Basically, they look like photos taken from a phone and not sort of great photos. So yeah, I think that's kind of an interesting update, guys. So I thought for those of you, our core community here, we could do that live little update before I put the video out, which is going to come out a little bit later today. Now, I also thought we should look at who's been buying NIO. So this is the NIO buyers here as of the 25th. And the first one I saw was Berkshire, I don't know, it depends on where you're based, Focus Fund, almost 500,000 shares. And I was like, is that, there's no Hathaway in there. Who are these people? I got a little bit excited there for a minute. And I mean, it is still good. Someone's buying almost 500,000 shares. But who are they? So I had a quick Google here, and it's these guys here, and they are based in Broadview Heights, Ohio. And they have a Berkshire Capital Holdings company in San Jose in California. And I Googled them a bit more. I found this Yahoo Finance article on them. And it seems to be a sort of smallish fund. I don't think there's any link to Warren Buffett. Is there? I mean, does anybody know? This guy is based in Milwaukee, Wisconsin, apparently, the manager. And they have something like 500 million US dollars under management. And the manager is Malcolm R. Forbes the third. I have not heard of him. I haven't heard of the first or the second ones either. And he's apparently been in charge of this fund since 1997. And apparently it is a very well-performing fund. That's all I know about that. But I thought I'd flag that up. But I don't think there is a link to the Warren Buffett of this world. So I think that's another one, but that is obviously still a good buy-in. HSBC Holdings, which is the biggest bank here in Hong Kong where I am, they have also added some 540,000 or 500,000 shares or so on the 25th. I think that's also positive. I think that is kind of, they're obviously seeing the dip here as a buying opportunity to get in on the EV world. And that's still a sizable amount. That's 70 million US dollars. I mean, they're holding overall now. So they are upgrading. They're not downgrading. And then you see a couple of smaller guys here. Tiny little bit of JP Morgan, but they have sold off a great deal. That's a diversified fund. And you see a couple of other stocks here who are upping their stakes. Schroeder, again, the biggest one down here on the 24th. So you do see some buy-in. BlackRock, for example, are buying a little bit more. The chap who used to be in charge of that BlackRock is now in the White House, of course, which we all take as sort of positive news. So there are people buying in. It is not like everybody's running away. And we can also have a look at the sell side, which one should always do. Don't just look at the good news. Look at all news. And there are, these are teeny tiny sell-offs here. But 600,000 or so here from Dimensional Fund Advisors. That's a little bit of a bigger one. But otherwise, these are relatively small numbers here. 13,000 shares, 2,000 shares, 7,000 shares, 4,000 shares, a couple of hundred shares sold off here. So I think I take it as encouragement. I think especially the HSBC buy-in here, because they are I know they're actually a London headquartered company, but essentially I think they are run more or less from Hong Kong. So Howard Chambers there, welcome to our live chat, another one of our members. Fantastic to have you on here. Guys, if you want to join our Discord channel where we discuss NIO and all sorts of other exciting things, you are very, very, very welcome, of course, to do so. And you may do so by smashing that Patreon link below. So do check that out. We are building up quite a nice thing over there. And we are also going to build up a portfolio for our community, which I will actually trade. And we're going to do a couple of those. I think we're going to do some technical ones, sort of following the stocks we are interested in, and to see if buying and selling on the technicals makes our performance substantially better. And then we're also going to sort of do polls and pick some as a community. I think that'll be kind of an interesting way there. So welcome everybody on the chat here. Captain Zany, fantastic name that. Sankar there, good to have you on the chat. We can, of course, have a quick look at where NIO is pre-market, and we will have a look at that. It's up very slightly now, pre-market. And I did see there was a bit of a turnaround of the Nasdaq futures and the US futures are pointing upwards. They are positive. Positive futures are good for the stock. And at the same time, the volatility index is actually down suddenly. So there does seem to be a slight change in sentiment this morning before markets open. Is that something to do perhaps with the stimulus vote that's coming in? That might have something to do with it. Sankar there, you're very kind. Saying thank you for mentioning your name. Guys, if you want me to mention your name, write liked, and I trust that you've hit the like button, and I will shout you out as well. Let's have a quick look here. Am I blocking that with my enormous head? I am. I'm going to move my enormous head down here in the corner. Make it a little bit smaller. You can see up here, this is the NASDAQ futures. NASDAQ futures generally predict how the NASDAQ opens. It doesn't tell you what happens the whole day, but how it opens. When it's positive, generally speaking, the market opens in the green. And it is at the moment. VIX and all these other indicators. VIX is a volatility index for the S&P 500 that is down. That is good news. You want low volatility for a rising market. VXN, though, the NASDAQ volatility is up 26%. So expect a NASDAQ volatility there. That is not really what we want to see, although it's flattening off ever so slightly here at the end. But it is still up very, very substantially compared to where we were yesterday. We can also talk a little bit about, if you guys are interested, and put it in the comments there. Fred, you have to write like to also if I'm going to shout you out, but Fred Wood, welcome onto the chat. Edward says it's a good time to average down on NIO, and I think that's something we should also look at is what to do really in these sort of market wobbles, corrections, crashes, and there are some things that we can do, and I'll also put out a more detailed video on that. But as we guys are live here, we can look at that together too. Let's have a quick look on where we are pre-market. Where are we? Stocks, pre-market. US stocks, generally speaking, what's up? Sundial is still up. Sundial is having a rally, aren't they? MSC down. Palantir is up a little bit, but that makes me happy because I own some of that. And look, NIO. Look, we see NIO. Pre-market, most active stocks. NIO. I'm excited by that. We don't usually see NIO on this, do we? But you guys can see that there up just a little bit. But 4 million shares. That is quite substantial volume, I must say. Let's have a quick look at what the volume was yesterday on NIO so we can get a feel for how big that is. Yesterday's volume was 62 million, so that's about 8% or so. That's relatively normal pre-market. I mean, it's not sort of out of this world. Right, where are we on the market? We are, of course, live 2%. What's going on here? NIO is up 1.6. Tesla is recovering 3%. That is wonderfully exciting. Let's see that here on a. Let's get a proper chart, shall we? Here's a proper chart. That's lovely to see. That's going up. Xpeng's up. NIO's up. So basically, it seems to me everything that's been getting punished is up. Palantir is up at 24.28 again. Even Baba is up. Our long-suffering Baba here. Amazon, Apple, Hillian, most things. CCIV up 9%. That's a bit of a surprise there. But Sundial continues its rally. Bitcoin still hovering around the 47,000 mark. And volatility index, generally speaking, is down, though the NASDAQ volatility is still pretty high. So, I mean, that's a positive surprise, I must say. I was slightly dreading another red day here. Philco, I'm glad you're also excited of that. Shanghai 20, if you have stocks of a company with solid foundations and future perspective, you don't need to worry much about the market correction. Absolutely. That is you're totally right there. So Tesla here, I mean on a percentage scale, has had a tough time, right? You could have bought Tesla at 670. Now we're at 703. So in the long run, it is good to keep buying, basically. I think that's always the lesson here. We can just see what the market is doing, heading up and then heading a little bit down again. But we are still above the $700 mark there for Tesla, and I think that is a positive. Now, one thing I kind of want to show you very quickly is the UVXI, because that is a potential hedge for market crashes, and I'll do a full video on that so everybody can understand it. Actually, let's make this a simple line. That might be a bit easier on this. Basically, you can see what it does when we can get rid of the volume here too. You can see what it does against the S&P, say. It basically moves in the opposite direction. So if you look at these two, the blue one is this UVXI. And what is that? Well, UVXI is basically it's an ETF. Tiratsa, you have some. Okay, great. Well, you're having a little bit of a tough time at the moment, but I suspect you're holding it as a hedge. It is basically the volatility, S&P volatility index futures about a month and a half ahead, and then it's leveraged times 1.5x. So it moves pretty dramatically. So basically, if the market goes up, UVXY tanks. If the market tanks, UVXI spikes to the moon. So it's not something you want to hold in the long run, because in the long run, you lose money with it, because in the long run, the market goes up. But if you think a correction is imminent, and let me just show you this here from, where we go. So can you see the beginning of my chart here, where I am here? So if, let me get an arrow, here we go. So if you'd bought in beginning of February here, it creates an alert for some reason. Why does it do that? If you'd bought the UVXI, and that's the blue line, if you had bought that then, and the market obviously tanked, right? So the market crashed about 30%. Let me put that percentage, your UVXY would have gone up 950%, 944% or so in that crash. So had you put $1,000 into UVXI, you would have had $9,440 extra you didn't have before, while your portfolio had only gone down a third. So it is an extreme reaction in the opposite direction of the market. And it does that all the time. You can see it, it goes down as the market goes up. Like here, for example, I'll put in a couple of horizontal, vertical lines so you can see what I'm talking about. You can see that here. You can see it, generally speaking, it moves in opposite directions. Here, for example, in October, it spikes as the market tanks, and then it does the opposite when the market rallies. And so you can see the trend also that if you are holding this in the long run, if you hadn't sold up here, you would have done that. So that would not have been fun. So it is something to buy before one thinks the market is about to tank. And it is a highly, highly, highly volatile thing. It is leveraged in its futures. Now, why does it lose you money in the long run? Because it's a future of the VIX, the VIX. It typically trades. Let me show you that here. Can I show you that here? Yeah, because so this is the blue line is UVXY. The orange line is VIX. And in a normal market, the UVXI is more expensive than the VIX essentially, and the futures settle at the lower spot price of the VIX, and therefore you lose money on it. It just goes down because the market on a long term rises, and therefore your futures, you're buying them at a higher price than the spot will come in at, and you keep losing money over time. So if you hold this for 10 years, you're just burning money. It's a terrible thing to do. But if you time it nicely, and if you look at it at the moment here, and I never give financial advice, please bear that in mind. This is just for entertainment only. This is straight from our goats here. So do smash that like button, guys, to support our sanctuaries. We're up to, by the way, about $266 so far this month for donations, and I'm going to do that donation in just 2 short days at the end of the month. So let's get that up to $300. Come on, these furry creatures deserve it. So you can see at the moment where we are down here with UVXI, and if I turn the percentages off, we are at sort of 9.7. That is kind of a similar level to where we were before the crash, right? We were at the sort of $10 mark. Typically, one is a little bit higher with that. And it is significantly below the VIX. And therefore, it might, in my view, actually be a decent buy. If there then is a correction, you can just sell it short term. You just sell it and you just make that multiple on your UVXY. And you take that money and you reinvest it into the falling market. And that way you are getting a better deal, and you're getting more cash than you would otherwise have. Because if the whole portfolio goes down and you haven't got extra cash, then you're just sitting on your hands and you're going, oh my God, what am I going to do, right? Should I sell? And that's, of course, the wrong thing to do. It is better to buy in low markets, provided you can afford to do so, of course, and basically look at your long-term plan. And I think that's the other thing I would say to everybody. If you own stocks, you should have a plan on your wall with when you buy, how much you buy, and what you buy, and whether you do that irrespective of price or not. And really, in a falling market, either you have to keep buying, I would say, or you should buy more near the bottom of the market, because That's how you average out. The mistake most retail investors make is that they buy at the top of the market, they sell at the bottom of the market, and they repeat the process, and it leads to a lot of misery here. Funny Shoe is suggesting that we all hit that like button. That will give us more donations, guys. So thanks very much. I can see here we are about 80 likes or so. So guys, keep those coming. One, it spreads our message. Of course, it does help with the algorithm too, guys. But as I say, we are our first donation check we did to the Gentle Barn was about $84 US. And here is another one that's coming up, and let's make that $300. Come on, I think we can get there. So Lily, your question there, what's UVXY? I think I've sort of explained that there. It's called ProShares Trust 2 Ultra VIX. It's a rather complicated thing, but it's basically a fairly simple structure. It's just buying futures all the time, about a month and a half ahead of the VIX, and then leveraging the whole thing 1.5x. So that is kind of, 950% there, exactly. So it's not something that'll make you money in the long run, but it is something that could make a lot of money in a crash. I mean, just look how lovely that is. And you can see here, let me put the percentages back on. You can see the VIX alone, because it isn't leveraged, it went up sort of 400, 500% in the crash in March. And whereas the VIX went up 940%. So that is a way to make 9x plus comfortably if you do think that a crash is coming. And even for the smaller ones, I mean, look here at the smaller ones, right? So yesterday, in the last couple of days, how much did the market go down by? I don't know. I didn't actually watch the headline figure there, but VIX went up 33%. Now the UVXY has gone up a little bit less. That's because it's dealing in the future, so it lags a little bit here. So if you have a short, a very, very short crash, like we're seeing here, it might take a little bit longer, and the UVXI might actually be a little bit slower, whereas the VIX might be faster. But if you have a more sustained crash, the picture will basically reverse. So you can see that here. No way in 24 hours can retail investors trade over 30 billion on GME. I'm sure that there are also funds and hedge funds, etc. They're trying to make their money back, and I think they might be trying to sort of take revenge on the investors there. So shall we have a look at NIO, guys, as that is what we are all interested in. And I'm going to remove the VIX here because we don't need it on everything now, do we? Now let's get some candles and let's look at what's happening here intraday. Is that big enough? Sort of, right? There we go. Can we move that up a little bit? Here we go. So we are seeing here, let's have a look at volume. Let's have a look at indicators. Actually, let's have a look at indicators from a day point of view, and I'm going to make this a 1 day period again. Wow, that looks messy, doesn't it? Reset that. Okay, so here we are. Let's zoom in a little bit on that, on the more recent. This is day by day, basically. RSI down here, momentum is improving, but it hasn't crossed yet what I would call the sort of signal line of RSI, which is at 50 points. You wanted to go through that line. You wanted to do that. And then when you get that cross here through the pink line, that's kind of when you have a buy signal. So that isn't doing that yet. Williams R is another momentum indicator, which is faster, typically speaking. And you can see we were down here yesterday, down here in the doghouse, basically, which is the oversold territory below that dotted line. And now we are moving up. But we are still, let me get a brighter color here. We are still, again, we need to cross over that 50-point line here. So we are only down there. So technicals are not telling us on a medium-term basis that we should be jumping in and buying like mad. Can we get some Fibonacci lines in here? Yes, we've got some Fibonacci lines in here. So we have support. Well, where is our support? At 46.88. That's quite nice to see that we are getting some new support lines in there. 46.88 and 45.65, 43.91. Hopefully we are going to go in the opposite direction, in which case we have a resistance level here at 48. 48.1. So that's what we have to basically break through if you are looking for a rally. We want to go through 48.1, and then next one up is 49.62. If you break through both of those, we should be well and good onto a rally, provided always that Tesla holds up. So let's open up Tesla here. Let's see what's going on over there. So they have broken through. No, they've gone below again. So you can see here that what I'm just highlighting there, where it is below that Fibonacci line there, we've sunk below it again. And basically at 697, we have this resistance line, and we went above it and we've gone down below it again. So we are actually now in a downward trend again. And hopefully that's just, it's going to get caught at 682, which is where we kind of caught quite a lot of that momentum yesterday. So we have to keep watching that. We're back up to 690 here, so it's kind of an interesting one. Philco says if we look at the intraday chart, we get a signal. So that's the confusing thing really about chart analysis, is that it depends on the time period you're looking at. So if you're looking at let me zoom in on this, guys. If you are looking at something on a, say, 30-minute basis, then each of your unit here is 30 minutes. And now I'm going to show you our indicators. Say I'm going to show you RSI. Okay, that's perhaps, it's still not there yet. Let's look at Williams R. Okay, still not there yet either. So if I'm on a positive short-term trajectory in the last 10 minutes or so, I can make it 5 minutes. And then we have crossed that buy signal here. But can you see it's going down again? You are basically getting a 5-minute by 5-minute indication. So if you trade stocks on a 5-minute interval, then great, look at a 5-minute chart for your chart analysis. But if you are buying things and you sort of trade them every couple of days or weeks or month, then I would look at a 1-day chart because that's going to give you a little bit more of a long-term momentum, and you're just going to keep missing these ups and downs and ups and downs. And if we look at this, say on a 1-minute basis, you get even more craziness. So, for example, you would have sold, or you would have bought at 1544 yesterday. You would have possibly sold off again at 1552. Perhaps not because it was sort of close, but you certainly would have sold off again at sort of 9:30 a.m. this morning. At 9:39, you would have bought in again. And now you are sitting there and you are a nervous wreck on your 12th cup of coffee with shaking hands. So unless you are really a high volatility kind of day trader, I would, generally speaking, not recommend to look at these charts on a minute by minute basis, because it basically gives you a sort of false confidence that you should be trading absolutely all the time. If you could, let's go back a day on the 25th, you would have bought at 203 and you would have sold at 231. Now, do you want to buy and sell every 30 minutes? That is, of course, a valid strategy, although I wouldn't just look at one indicator. I'd look at a number of them and sort of do something there, or perhaps automate something also. Desmond here, welcome to the chat. One of our lovely members here with his shiny 1+ month badge. You're one of the very few there, because we've only been around for just over a month in terms of membership. Wonderful to have you on there. Rex Universe, also great to have you on there. Philco, thanks for that lesson, Phil. So, I mean, that's really one thing is, so there's an alert on VXN. So you can set these things here. So I sometimes set these. Now my Williams R has crossed below the 50-point line on the VXN. That's kind of a nice example there. So if you were trading VXN, you could then sell it, because you see that massive drop there. You could sell it, and it's basically giving you a sell signal there. But I wouldn't do that on a minute by minute basis. I would do that on perhaps on a day basis, in which case there isn't that signal yet, right? As you can see. So I think it's kind of an important one with technical analysis to basically establish how frequently you want to trade and what time period you want to look at. Do I think NIO is going to go back up to $60 after the earnings report? Now, I do think it's going to go back up to 60, but the question is timing, really, isn't it? I think long term, the analysts are bullish on this. I mean, we have, was it Morgan Stanley and an $80 target and that sort of thing. At the moment, I think what we're being dragged down was just a bit of market jitters. I think the GameStop stuff is not helping. It basically takes confidence out of the market. It takes money out of the market, not necessarily into GameStop, but people are just thinking, this is crazy. I'm going to sit on the sidelines. I don't want to be any part of this. This to me reminds me of, 2000 or 1999 or whatever it is. So I think it makes people cautious. And then, of course, Tesla's announcement yesterday that they have a chip shortage. That definitely hasn't helped, even though... excuse my sipping here. These numbers were actually positive. They are actually down again. Xpeng again down today. I'm still wondering whether that might be the long-term holders cashing out there because the lock-up period expired on the 23rd, 24th. I can't quite remember, but I think it was 2 days ago when the market started to tank. Dixon, you had to sell Palantir to cover your margin call on Baba. Very sorry to hear that. It is. In a way, I almost think the last couple of days are designed to make us remember that the markets go in both directions and perhaps just make us do a little bit more planning and housekeeping on our portfolio of, what would happen if the market went down 20-30%. And I'm not saying it's going to happen tomorrow. I mean, the Fed is telling us every single day that they're going to keep printing money. And yes, 10-year bond yields are up a little bit. But that's actually a funny one because in a sense, that indicates a recovery of the economy. So that the broader economy might grow more, GDP might grow more, unemployment might fall, which should be good for stocks. But at the same time, it sends stocks down because people fear that therefore interest rates are rising and perhaps monetary stimulus might be turned off or slowed down because the real economy is improving. Now, if you listen to the Fed, they're telling you the opposite. They're basically saying we don't see inflation and we're going to keep printing money. And what they could do actually, if the 10-year bond yields keep going up, they could just buy them. They could just buy those bonds. If you buy the bonds, the value of the bond goes up, the yield therefore goes down, and therefore that sort of yield curve thing goes away. I mentioned based on Fibonacci. So yeah, if you want to look at where we are with NIO, the slight issue we have with NIO, it's sort of fallen below our Fibonacci retracements here on a sort of short-term basis. I put that in again. I quite like putting in the automated ones. It sort of takes away the worry whether you're doing it right. Now you could, of course, extend that down a little bit here, but we are essentially substantially below where some of those support levels are at $54 or so. And if we zoom in a little bit on that, you can, of course, see, I'm going to put like in a couple of lines. So we do have support. We do, of course, have support at 41.53 or so, which was approximately the low on the 23rd. And there are also others here. There is one from the 29th of December. You have to go back quite far in time, right? So from that. And then, of course, from yesterday, you have where did we end on yesterday? The low was $46, 46.01. So this line here of mine might be ever so slightly off, but at sort of, I put it a little bit too high, but basically at 46.01, there should be, it's a little bit difficult to get them exactly right when you are on a small screen. But yeah, so you can kind of see where I'm getting here at is, you see where the little lines are at the bottom of these candles. That's basically where you have that support from yesterday. And then, of course, we have one from the day before, which was sort of 47.36 or so, but at the moment we're below that. They also tend to act as resistance lines on the way up, which is similar to how the Fibonacci thing works. So really what we want to do, guys, we want to get back to 54.37, which is when we are back in Fibonacci land, and we have that strong support there, which is also support levels that we had here. I'm just sort of putting that highlight there below so you guys can see it. You see on these 2 days, 3 days, actually, we're very, very close to that Fibonacci line. So there is kind of a double, triple or so support there. And then very, very similarly again here on that day, which is the 19th. So around that mark of that lower Fibonacci 54.37 or so, that's when we get sort of real strong support again. So that's kind of where we need to break our way up. But we are down a little bit now in the market. So markets are turning a little bit more red than they were just. We can have a quick look also at US, United States. Here we go. Let's have a quick look at the NASDAQ, generally speaking, see what is going on. In terms of volume, Apple, the biggest one here trading, Apple up, AMD up, Tesla up on some decent volumes, over 6 million. And then Microsoft up just a touch. If we look at who's getting punished, Baidu, crikey, people are not liking Baidu, hey? JD is being punished again for no particular reason. And then we have some, Netflix is down. People switch off Netflix if the economy recovers. I sort of doubt. At the same time, Marriott is down, who should benefit from a recovery. So it is all a little bit kind of irrational at the moment, I think. Nvidia is up today. They were down quite a bit yesterday. Facebook is up again. That's a funny one also because it's sort of a tech stock. That's a value stock. I think that's a deep value stock if you are looking for deep value stock. And that's, of course, another strategy to do is to move one's portfolio more into a sort of a safer direction to stocks basically that have very big free cash flow, that are highly profitable and are basically essential. And to me, Facebook is essential, not for users necessarily, but as an advertising platform. Bye here is asking, so many good news, why is it still going down? It's market sentiment. We are trading, I think, entirely on momentum, and we have been probably for the last 3 months or so. And if momentum, confidence gets a little bit shaky, then we are seeing sell-offs. Though if you look at that here in Nasdaq stocks, there are a lot of green stocks. There are more green stocks than red stocks. It just depends on what sector you're looking at. And the EVs, because they have gone up the most in the rally, are the ones that are getting punished the most. We can have a quick look over also at the S&P. By volume here, Apple and General Electric is down, but on quite a fairly large volume. Ford is down. Tesla is now down. So that's what's turning the screws on NIO. Let me see if we can get this sorted by change to. Let me just hit refresh here. There we go. I need to be more patient with my clicks. Salesforce is down. Procter & Gamble is down. It's kind of weird, isn't it? Procter & Gamble is down. So people are kind of thinking there's a recovery, and therefore they are punishing perhaps again the more defensive stocks. So S&P. So this is the Dow Jones now, looking pretty red there. What about the S&P? Let's have a look at that. I clicked on it once. Apparently, I need more patience. Otherwise, it doesn't do what I wanted to do. Will CCIV help? Well, I doubt it. To me, that is actually part of the problem, because that kind of high volatility, and we are up again here a little bit, and just retail investors also thinking, hey, we're getting screwed by Wall Street again. It removes confidence. Now you can see that up here in my little chart. All the volatility indices are now down. That's good. You want them to be down. If the volatility is down, generally speaking, your market goes up. The Nasdaq futures are up. So overall, we should be having a fairly good day. But, oh my God, there it did it finally at last. What's selling off here that we care about? We don't really care about Foot Locker that much. Anybody have Foot Locker stocks? Probably not, right? But this is one finicky little button, isn't it? Anyway, I'm not going to let it drive me mad. Nasdaq is up a little bit, S&P down just a touch, and volatility indices are down somewhat. Guys, if you want to ask some questions, do feel free in the chat here. I will look at them. Philco says, Facebook is a weird one. There's quite a negative view around how they handle privacy, but humans can't seem to help by continuing to use it, which gives them the money. Haha, it won't go away. Yes, I agree with you there. In a way, I think it doesn't really matter anymore. They've got the usership, the user base, and it is just the world's largest advertising platform, perhaps apart from Google. So they're going to get money pretty much no matter what happens, and people are going to look on that thing, and Facebook's going to make money. For me, it is now a value stock. I think the tech's kind of gone out of it. It's just like they just get money every day, every minute, every second, pretty much no matter what they do. The Kunz brothers there, good to have you on the chat. You're in the red again today. I'm sorry to hear that. It depends a little bit on what we hold, but basically a lot of our beloved EV stocks, etc., even Palantir, Barber, all that stuff that's generally had a fairly good time is getting punished. The more old world stocks, and Amazon, I'm counting them in that slightly, they are up a little bit here. Let me hide the US 500 here. Apple is up a bit. EHang still hasn't really recovered yet from that short sell, right? Report, you can see that here. They've had a pretty tough time. They're putting out more videos every day, which I think is a good move, but it'll take them some time to recover. Howard saying is it worth buying the dip now or wait till Monday? I think it depends a little bit on your horizon. It is relatively cheap, right? I mean, look at this simple blue chart here. Could we go lower? Well, we are going lower at the moment. So it is possible, I think, that we could go lower. And take the percentage off here. In terms of momentum isn't good. And I mean, if you're buying things for the long haul, you can just go, oh, I'm buying it today. It's cheaper than it was a little while ago, and I'm going to hold this thing for 5 years, 10 years, 20 years, who cares? And then I think it probably doesn't really matter. If you want to time it a little bit better, I would prefer, for my personal kind of sanity, I would rather buy things so you could buy it basically on the way down, or you can buy it on the way up, right? I'd rather miss a few dollars or cents and buy it on the way up, personally speaking, because it just makes me feel a little bit better immediately after I buy it. Whereas if I buy it where it is right now, I'm sort of thinking, am I buying a falling knife? How low is this going to go? And I'm going to kick myself. I think a lot of that is psychological. In the long run, it doesn't really matter. But it just depends on how long your horizon is there. Thanks for that question, Howard. The SPY heat map is red. It says Liddy there. Okay, you're looking at one of these tracker maps there. Remember when Facebook IPO'd, $38, dropped to 19 after a year, so back up and then kept going? Absolutely. If your time horizon is a long one, it doesn't really matter. Do you use stochastics indicators? I do sometimes. We can pull some up here if you like. Let's see what stochastics we've got here. Just a pure stochastic RSI maybe, or a simple stochastic. We can pull them both up. Are pretty similar, aren't they? So you get with that, and let me zoom in a little bit on that. I'll put in a couple of lines so we can see how that works. So no, that's a little bit off. Where we go? Like, sort of there. So if you look at that, here that little blue line crossed the orange signal line, so it gave you a buy signal, right? And we're on a day basis here. Similarly with the pure stochastic, they both did pretty much the same thing at more or less the same time. The blue line crossing from below above the orange line. And then what did the stock do? The stock had that little mini rally here, and that's the buy signal. And then now you're getting a sell signal here today, and similarly here for the stochastic one down there. So it does work. It didn't make you any money on that particular trade, I think. I think it was a bit too late in calling the so you would have lost money on that. You see, the first red line was a buy. Let me make I'll make that a green line. So that was a buy, and then the red one was a sell. So I think really what I will always do, if you look at indicators for each stock you're looking at, backtracker, go back 5, 10, 20 events of when it gave you a buy and a sell signal, and see whether it was right, and then find a pairing that's different. So you're looking at two stochastic indicators as kind of nonsense, because they both are based in essentially the same statistics, the same maths. So you kind of want to look at something that's a little bit different. So say you could look at an MACD. Now MACD is a little bit too slow for something that moves as quickly as NIO does at the moment. So that might not give you quite as much joy, but there are sort of pairs. RSI and MACD, for example, is quite a nice pair, but you need a little bit of patience, and you need the patience to wait out a little bit of where things are heading. Palantir opinions and why is it dropping so much is asking AK here. Apologies. I'm thirsty. I did a video the other day with a so do check that out on my Palantir playlist. I'm bullish on Palantir long term. I think it's a great company. I think it's a great stock. Yes, it has political issues, very, very true. But I think fundamentally, big data and big AI data processing is going to win the day. And I think these guys are quite ahead with that technology. I like the IBM tie-up. It makes them socially acceptable again. And it also opens up a broader customer base there, not just governments and sort of oil companies, but a broader, almost more medium-sized companies. Companies that are still having billions of turnover, but they don't need to have 100 billion turnover to kind of adopt that. So I am long-term bullish on it, but it's not having a good time. There are, of course, the insider sell-offs there from some of the management. That certainly hasn't helped in terms of timing. Now, I can understand if you are working for a company and you get share options at the IPO, when you can finally sell them off and you just want to buy that, house or that car or that boat or whatever it is, you want to sell off a little bit. And they only sold off tiny bits, $23 million here and there, that sort of thing, which in proportion their holding is very, very small. But market doesn't like it and sentiment is dragging it down. So I wouldn't say there's anything fundamental there in it. I think fundamentally it looks quite cheap. And I also did the other day a discount cash flow value analysis on that. And that spreadsheet, that XLS, is on our Patreon. So if you want to check that out, guys, do click on the Patreon, which also gives you access, of course, to our lovely Discord community where you can ask me questions also all day long, and all our community as well. We discuss lots of things. So thanks for that question. Joe remembers when Tesla was at $38 in May 2019. It does seem like a long time ago, doesn't it? Tesla here falling just a little bit off here, 1 point off. When do you think Palantir will come back? Well, I bought some while it was still falling, and that was the falling knife theory, not taking my own thoughts there. We can have a little bit of a look here at a couple of indicators. So RSI basically gave us, this is on a day-by-day basis, it gave us a sell signal on the 12th. So that would have been quite a good one. Let me put in these lines, guys, and I'll put them in so you can see. That was a sell line, and we have been in that territory ever since. It has been quite accurate. Now let's see when it gave us the last buy signal. That was, I'm going to count that one here, at 14th of January. So that was a green buy signal on the RSI. So one would have bought at 24 and one would have sold at 31 or 33 even. So that would have been quite a nice little rally. I think the smart money would wait this out a little bit longer till momentum turns around, because at the moment the markets are in sort of jittery worlds. So I would wait this out a little bit and see when this returns. I will keep looking at Palantir as well, guys, and I'll put over into our Discord as well, of course, if I do buy some more in the near future. And it kind of looks like it might be ripe for a picking if this keeps going down some more, because I think they are going to make a lot of money in the long run. What are my thoughts on space? I haven't got that much thoughts on space, really. I haven't yet listened to the earnings call. I was going to. Let's see how that's reacting. That's sold off quite heavily. So from a short momentum play, this is not looking very positive. You are just in the midst of a loss of momentum here. And you can see that at the 50-point line here. We've gone below it, and now we are going down it quite severely. So again, I would wait that one out personally and see momentum recovering, because if I look at actually where it has given us buy and sell signals here, they have been really quite good. So again, I think Virgin Galactic is a very, very momentum driven stock, and when they have, of course, there are some events, right? When they cancel things, when they delay flights, etc., they get hit over the head. But it does seem that earnings have not impressed the world so far with Virgin Galactic. So Rex question there. I'm new to investing still, but what happens if I sell some NIO shares but buy back at a lower price? Would I be losing more money? That's just a loss, and is it a good or a bad idea? Look, I think stop losses are actually a very sensible strategy. I think we all need to have something we feel comfortable with, and that could be 5%, 10%, 20%. It really depends on you, whether you need that money, when you need that money, and how much of your portfolio is in that stock. Can you live with, 30% less of that stock for a little while? And if you look at the last crash, that was actually only a month or two, and then you were back up there, and then you would have been laughing. There is, of course, a strategy where people simply keep buying. And so rather than, if you've got $1,000, don't spend it all in one day, but sort of do it staggered. And that way you achieve more of an average, whether it's up or down, but in the long run, it's still an average. And certainly if it goes down, you have benefited from it. I think really I think probably the safest strategy is to simply average out over time. And that is simply to say, I am going to buy this portfolio of stocks and ETFs and indices and whatever whatnot every Monday or every first of the month or something like that. And that could be a larger amount or smaller amount, but you're still doing it. And therefore, over time, you're averaging out and you're sort of avoiding buying just the peaks, because I think that's really the danger, buying just the peaks. Now, if you are happy to take a bit of risk and you don't mind, you buy something today and tomorrow it's down 3% or 5% or 7% or whatever, you sort of think, well, whatever. In the long run, I believe in this company. I think fundamentally this company should be at 80 in a year's time or 2 years or 5 years time or whatever it is. Then buying in a falling market is probably smarter than buying in a rising market. So I think it depends, I think, very much on your own personal risk profile and your horizon. And I think that's really one thing we should all write down, and we should be clear with the money we are investing in stocks. Is this money that we are going to need in the near future? Yes or no? And if it's a no, then you, I think, are a happier long-term investor, and you probably have more success. So perhaps putting some cash aside there for a rainy day and not investing, that might be the better strategy, even though, yes, that cash will lose value in the long run. Absolutely. But it might make you sleep at night. So thanks for that question there. What am I doing with my portfolio for the market correction? Asks, okay, what is this? That's a great screen name. Thanks for the question. I'm doing, what am I doing? I am buying with fresh money more defensive things, so more value stocks. And that could be something like a Facebook or something, which, because to me that's a value stock, or any number of value ETFs or funds that are out there that one can buy. I've mentioned there's a UK fund I quite like, Fundsmith. It's actually 90% invested in the US. It's similar, like sort of a Berkshire Hathaway kind of a setup, but a bit more diversified. A lot less Apple in there and a lot less cash in there. So something like that, I think, is an idea. I haven't done it yet, but I want to get in on some of the volatility indices because I do think that when we do see a correction, it'd be nice for a little part of my portfolio to move in the other direction. And I do appreciate that's a bit of a short-term measure. But if you just missed that, my explanation of that, I'll put out a video after this call. So all you have to do is hit the subscribe button, guys, and you get that notification for it, which explains really sort of my 5 strategies for how to kind of crash proof a portfolio and how to actually make money in a crash. It is very, very, very possible to make a lot of money in a crash and then take that money and buy in at the bottom or near the bottom of the market, and then be the happiest investor that comes out of that sell-off. So thanks very much for that question. How do you feel about Tesla with the Bitcoin chip shortage? Could it be much lower in your opinion? Look, I get out there. Thank you very much for that question. I think Tesla is a fantastic company. I think they are a wonderful disruptor. They've created this whole EV industry. The chip shortage is not something that's only affecting Tesla. It affects everybody. GM and Volkswagen, everybody is at times slowing down and even stopping production. It's a global phenomenon. Battery shortages are the second issue for everyone. And because Tesla is selling so many more cars so fast, their growth is phenomenal. It hits them perhaps first than someone like NIO, who are, yes, they are selling more cars, but much, much smaller numbers. And it's a little bit more like this month we make 7,000, next month we make 7,200, and then we make, 8,000, that sort of thing. It's much more manageable to kind of manage that inventory. Whereas if you're selling an extra 50,000 cars, you're much more likely to be hit by that kind of issue. So it actually seems to affect the biggest guys first. I don't think that's a long-term issue. If you are very bullish on Tesla, it is probably a good buy opportunity. Though many people, of course, are saying, well, Tesla's valuations are hard to follow. But that then, it depends on your view on the EV sector. How much market share do you think they're going to get? How much revenue do you think they're going to get from full autonomous driving, subscription businesses, all that kind of stuff that comes into that. So that's, I think, is a side issue. But if you are looking to buy Tesla, then, well, I'd rather buy Tesla at 660 than at 900 or wherever it might go. So that there where we were Tesla, we were at 895, right? 902 even. So at the moment, this is a more attractive price. I think you have to admit that, relatively speaking. But it could go down further. Absolutely, it could. We could see a market correction. We could see bond yields go up further. We could see people not really believing the Fed. We could think, well, stimulus is going to gonna get phased out because the economy is doing so wonderfully, and vaccinations could be hugely effective, and that in a strange way might actually cause markets to go down, because therefore we're expecting higher interest rates and less stimulus. It's all kind of topsy-turvy, up and down at the moment, the incentives that are out in the market. Do I think Ford is a serious contender? Ask, okay, what is this? No. I think they'll stick around. I think they'll get bailed out if they fail. And I think they'll put out some EVs, and I think they'll be decent, and I think they'll sell some. But I don't see them as a real contender. GM has more of a chance of that, I think, but Ford is a debt-ridden, pension deficit-ridden, moribund old company. I'm sorry if there are any Ford fans out there, but I think it's a company that should have gone bankrupt 20 years ago, and it did, and it got bailed out under Obama. And that probably wasn't, in the long run, not really the smartest move, I think. But I can understand why they do it. You don't want all these people to lose their jobs. But I think, no, I don't see them in the same league as Tesla or NIO. Joe, about my thoughts on ARK in a market correction, weight or dollar average down? Well, ARK obviously is struggling with cash outflow. For an ETF, I mean, their portfolio is, what they're investing is very liquid. So it isn't a huge issue for them. But of course, they'd like to turn that around. It is sort of a new experience for them. Weight or dollar average down. I think, Joe, it's a little bit like the previous question. It depends a little bit on your horizon and your appetite for risk. How much does it upset you when you buy something and then it goes down another 3%? If that really upsets you, then it's probably better to wait a little bit until momentum turns around, and you can see where the momentum is on that too. Something like, do we have ARK? Okay, here we go. There we go. Is that ARK? Seems like the chart didn't change there, right? That's because they're heavy into Tesla. It looks almost the same as Tesla, doesn't it? I was like, is that really ARK, or am I still on Tesla? Let's try that again. It looked absolutely the same. I found that kind of hard to believe. ARK. Here we go. No, it's not wanting to show up. Is this ARK Innovation at 126? Yes, it must be, because it's not NIO. The charts look almost identical. Can you see that? So it's moving very, very much with the EV sector here. Momentum, you can see that down here, guys. Momentum is doing that. And it gave us a sell signal here. I'm looking at one technical indicator here. I don't recommend anybody does that. One should always look at a wider range and, of course, understand what's going on in the market. But that gave us a sell signal on the 22nd of February, which was certainly a smart move. And it's been quite good, actually. If you look at the buy signal 11th of November, this is an advertisement for the RSI indicator that would have gotten you in at 98, 96 even. And it would have gotten you out at 140. So that would have been quite a nice trade, though I do not recommend to trade on just one indicator. I think that's a little bit madness. I think that hopefully that answers your question somewhat. NIO, you say, is getting serious, $45. What happened to our... we have to kind of wait and see here where we are with our... support levels. I think Fibonacci is still not going to catch us there. Emmanuel, good to have you on the chat. One of our long-term supporters. Thank you very much. Frank is praying that NIO will go up. I think we all are here in this community, Frank. And if you want a support community to join our Discord channel, where we all, I think, have similar feelings for that, and you can do that by clicking on the Patreon link below. Dim here says, greetings. If you know anything about SK Telecom in South Korea, and perhaps a comment, amazing comment as always, thank you very much. I used to cover SK Telecom a little bit when I was working at an investment bank here, but that was quite a few years ago, and that was only a short period. I have not looked at SK Telecom in some time. That is, of course, an interesting stock, and it's an interesting part of, I don't know if I can pull that up here. There's an ADR for it here. Okay. I'm just going to tell you, the momentum short term is negative. We are very, very close to the bottom Fibonacci line here, which is at, can I see that? Hard to see, 24.1. We are exactly at the Fibonacci support line here. at this particular point. If we go below that, we are a little bit in trouble. Not massively in trouble, but you will see probably more of a sell-off than you'd want to see if you are long on that. So it seems Korean stocks are also in the slight downward trajectory here of momentum. I haven't looked, to be honest with you, at fundamentals of SK Telecom for some time. That's an interesting stock. I might do that again. Marjorie there does not agree with NIO being a long-term positive story. That's a fair view. I don't have to agree with you on that, but I think that's sort of the point here, that we can agree to disagree. Politics, I don't talk about politics much here, so I'm not sure how you know my political views. Gary, any chance NIO reports a price positive EBS on Monday? That's the only way we're going to get a positive price momentum. So earnings expectations are somewhere between, for Q4, earnings per share of sort of minus sort of 18 cents to minus 12 cents. That's sort of what analysts are generally looking for. That's a pretty high tall order, I think. I think the expectations are very, very high there. So can NIO surprise us with that? I think they're more likely to surprise us with good delivery numbers. But the last good delivery numbers for January, the market ignored them. Why? Well, because GameStop was happening and everyone was talking about Robinhood and all that sort of nonsense, and they weren't paying any attention to fundamentals. And that's a little bit the danger with Monday, that the wider world, Tesla buying Bitcoin, or whatever it is, these sort of things distract from people looking at the actual numbers. So that's what has me concerned a little bit there. Also, we've looked at this before. Historically speaking, NIO does tend to sell off on earnings days, and you can see that on this chart quite nicely. Where are my earnings lines? Here we go. You can see all the little E's. There should be a line for each of them. Let me just close this so it gets a little bit bigger. What happened to the lines? Okay. A trade view has here done some upgrading, but you can see, let me put in a couple of lines so you can see where the earnings were. And I show that to you. So this was in November. You can see earnings reported, sell off on the next day. And then the previous one, it was in August. It gets rather small because the stocks rallied so much. Earnings reported, sell off on the next day. Now, there was always a rally afterwards, but that's kind of what's been happening. And if you go back further in time, you basically keep seeing that same story, except it gets a little bit harder to see because the stocks rallied so much. But you can see that little tiny red bar down there. It just went down on the day and then it recovered afterwards. So from an historic point of view, earnings day isn't a buy, and NIO has managed to surprise the market with their earnings numbers, at least the last couple of quarters. So earnings days are a funny one. You saw with Tesla too, right? Tesla sold off with, I think, rather excellent, stellar numbers. The news like to find the one kind of controversial thing and pin the headlines on that. And most people only read the headlines. I think that's a little bit the problem here. So do I expect fireworks on Monday? I think probably not. I'm hoping we're going to get some very good numbers, and I'm hoping we're going to get some very good delivery numbers. And I'm hoping we are going to get a Sinopec deal announcement. And now that would be very exciting. And I think those things would, in the long run, move the stock. And I think that's kind of, you have to differentiate between the sort of short term is all momentum at the moment. It's all momentum noise. But in the long run, fundamentals do matter. It just, the question depends on the time frame here. Funny Shoe is going to sell Grandma Sterling there. Okay, thank you very much for that comment. All in NIO, says Mike, do you believe in stop loss in a stock like NIO? Look, Pop it's a very good question. I think stop losses are a very sensible strategy, especially if when your stocks are down 10, 15, 20%, you lose sleep and you need that money. So you kind of need to set really like, what is the volatility you can live with? And for some people, that's 5%. For some people, that's 20%. For some people, that's 30%. Because some people think, well, if it goes down 35%, I'll buy some more. I've got an income coming from somewhere else. I don't rely on this, and I'm only going to touch this stuff in 30 years' time. So you have to kind of set that band. And I think that's a really pretty sensible thing to do, but it really is quite personal. So if you are buying things on a sort of short-term speculative basis, then stop losses are even more important. But if you're buying things to hold in the long run, then really you need to kind of assess, like, what's your risk profile actually? And what I recommend is write down that risk profile, stick it on the wall where you can see it every single day and listen to it, because you did that in a moment of calmness, not in a moment of market madness. So that's kind of my thoughts there on doing some planning. Flame, your long Barber. Barber is our long-suffering friend here. For no particular reason, Barber is being punished unfairly, I would say. I have a great sympathy for Barber. So let's see. Not looking particularly happy there today. Where's the last support? 41 or 43 for NIO. I don't know what happened to our lines here, but we can put in some more. We'll put in some more. So let's look at some support levels here. We of course have some fairly obvious ones here from the big drops. Basically, the way it works, you put them at the bottom end of the days, the bottom end of that candle. Now, really what you want is for that line to get touched a couple of times. That gives you a much stronger support than if it only happens once. And that's a little bit the trouble with these supports in the last couple of days. Look at that line back, they're only happening once. There is no double support. And that's why you want your stock to zigzag a little bit. You don't just want to go straight line up, then you lack support. You want to sort of zigzag up very nicely and hit those support levels a couple of times. Now, you can see here, for example, that's a nice example. You see these two little red dips there, they're pretty much both stop at 54.37 or so. So that gives you that double support there. And that's what you want. You want for the price to go up, go down, get stopped at a level, go up, go down, get stopped at the same level. And then you're like, I've got a double support. Triple support is even better. And that's a little bit the challenge we have here. There is very little here that's double. Now there's one here probably. I'm going to put that in there. You see that over here, that little red bar, that little green bar there, they stop at the same level. Let me see if I can put some arrows in there. Here we go. There's an arrow. That's a huge arrow, isn't it? And why is that so big? Okay, that's probably not the best thing to do. I'll sort of just highlight them with a little dot each, and then I'll show you again on the magnifier. See these two there, they stop very nicely on the same level. That's quite good. But if you then rally up and then you crash below it again, that somewhat invalidates the support level again. Now we haven't actually done that, so that's a fairly decent support level, but that's at 41.12, so that's not really where we want to be going. But at the moment there isn't a great deal in between us and the lower levels there. Where there is another one here at sort of 42.15, but yeah, we have. That's, I think, also why we're seeing these quite sharp movements, and that's why you see the gap between Fibonacci and the next support line is pretty big, because in this period here, in that kind of time space, you can see we did not zigzag up and down, right? In that motion, had we done a little bit of this and that and then gone up, it would actually have given us more support now. Sander says only 5% of people can get a bottom. Absolutely. Nobody needs to time the bottom perfectly. I think in the long run, it's all good and fair. So it really just depends on psychologically whether you want to buy something while it's still falling, or whether you want to think, I'm going to buy it while it's still going up a little bit. Of course, it could go down further again, but it is sort of the way you want to time it. Flame Lane is talking about CVS Health as a rare opportunity. Is it? Okay, I have not looked at that. That's that chain of pharmaceuticals, pharmacies in the US, is it? I don't know whether that's a rare opportunity. It's rallied tremendously, I guess, on sort of COVID cells or something. I don't know what. Actually, I have no idea what they make. I just know CVS as a retail brand, and now they are selling off like the rest of the market. So thanks for raising that there. You can see here in the top right of my watch list, all the volatility trackers are in the green, and that is not a good sign. You want volatility to fall, not to rise. However, the Nasdaq futures are also positive, and that gives us a little bit of a ray of hope here. Let's have a quick look at the market overview. Nasdaq composite, see what's going on in the world, the wider world. By volume, I like to look at volume because it gives you a little bit of a feel for what's really being traded the most. Apple, Tesla, AMD, largest volumes here. Plug Power actually doing rather well there at 4.7%. Those earnings were out today, I believe. And then in terms of change percentages, this is a sticky one, isn't it? This particular chart. It somehow doesn't like me clicking on the change. So let's have a look at the Nasdaq 100 and see if that is more cooperative. There we go. Come on. I don't know why it doesn't do that. But we can see what are the big movers here, what are the big losers that we actually care about. A lot of reds here, obviously. Most things are suffering a little bit. Builders first, sources up. Live persons up. Majorly, that is. Some bio companies are benefiting from this. But generally speaking, it's a pretty red picture. Although the Nasdaq is only down 0.60%. So this is not really a big sell-off. This isn't a correction. This isn't a crash. This is more of a sideways wobble, I would say. Oh, Flame Lane, thank you very much for explaining. CVS is one of the biggest distributors of COVID vaccines in the United States. Thank you very much. I guess that is probably related to those CVS pharmacies I've seen when I visited the United States, which was now obviously years ago because I have not been on a plane since about 1936. At least that's how it feels. It's a great pharmacy. AI deals with CVS and Williams and hopes to deal with Walmart soon. They are worth a small gamble. So you are recommending their fund issue, an AI company. Thank you very much for that recommendation, AITX. If you want to hear more of our community sharing recommendations, guys, join our Discord channel. That's what's happening over there all day, all night, even when I'm sleeping. And I also share, of course, more news items I see over there that don't always make it into videos. I can't make 50 videos a day if there are 50 interesting stories. So, Claudio saying here, I bought 20k at 61.70. I guess you're talking about NIO. It hurts a bit looking at it, but it's not money I need right now. And I'm confident that in a year it'll already surpass it. This is how market works. We have to accept it. I think it's good, Claudio. You have a long-term horizon there. I think in the long run, the patient win, at least on average. NNDM, I have not looked at that today. Nano Dimensions here. I don't have a strong feeling on the stock one way or the other, I must say, but it is basically moving like everything else. It's basically moving like ARK. Yeah, sorry, I don't have much of a strong view on that company, one direction or the other. But our EVs are looking pretty unappealing at the moment. They are down. NIO down here, almost 4%. Though if you look at what was happening yesterday, we had a bit of a sell-off. We had a bit of a buy-in again at the end of the day. So it's quite possible we might see that again, people buying sort of discount stocks really at the end of the day before the weekend. So let's see if we're going to get a little bit of a momentum reversal there. But at the moment, it is looking a little bit red. We can look at this on a minute-by-minute basis and just see what's going on there. We are, that's a bit small, isn't it? Here we go, zoom out a little bit so you can see the actual sell-off. And yeah, we are sort of moving sideways at the moment. I think that's fair to say. Moving sideways. Sideways is better than down. Do we have any numbers on short selling numbers concerning NIO? Well, we can have a look at short interest here. Looks a bit insane on this chart, of course. At the moment, short interest is, okay, this is minute by minute. This is nonsense. Let's look at this on a one-day basis. Short interest is, hang on, what's going on here? Yeah, short interest is 14.9 million, which is pretty consistent with, it's a little bit up, but it's fairly consistent with where we have been in recent days. We were down after the whole GameStop saga. We were down a little bit lower, the sort of 9-10 millions, but on average, we are kind of around about these numbers. It's gone up a little bit. Yesterday was 13.7. The day before it was 22 million almost. However, you have to kind of look at that as a proportion of volume. And yesterday we were at 95 million volume and we were at 15 million short interest. Today, short interest is the same, but so far we've only had 31 million volume. Why is that? Well, the day's only just started. So you have to kind of look at it through the day, and you can see that here. You can see these numbers. The green one is the short interest and the gray one is the actual volume today. But I do imagine that volume is going to go up to a similar level to what we saw yesterday. Otherwise people would just sit on their hands for the rest of the day. Felix, what are your honest thoughts on Lucid Motors as a company ignoring all the stock drama recently? Asked Silko there. Look, I think there is a huge space for another US EV company, a pure EV play. I think the money wants it. The money desperately wants to go somewhere. If they put out a decent car and a second decent car, and then they start putting out cars a little bit cheaper. They don't explode. They drive well. They get good reviews. They do a decent job. They've got that nice shiny factory, decent capacity. They can expand that quite nicely. Then I do think in the long run, Lucid can be a very, very good company. The original backers are good. I mean, the chap come from Tesla. I know some Tesla guys don't like it, but it's still a positive. I think from an investor point of view, the original backing was BAIC, that Chinese state-owned automotive giant. So they've got some good backing there. The Saudi investment, I think, is a good long-term partner to have. They are big into Daimler and some other automotive stocks, and they're long-term kind of investors. So I think there's a lot of positives for them. But we need to see a car roll out of that factory. We need to see what that car really does and what it looks like and what it feels like. And then you need to give them a little bit of time to kind of pick up production and see how they're handling that. That's kind of the challenge, going from 0 to your first kind of 1,000, 5,000 cars a month. That's the most difficult phase. That's the most risky phase, because a lot of things can go wrong. I mean, look at Tesla, right? They've now been doing this, 17 years or something? And they're having problems with manufacturing, and all car manufacturers have that all the time. But when you keep reinventing and keep changing things a lot of the time, that's really the challenge. And if you're new to it, it's even more of a challenge. So I do think Lucid can have a bright future in the long run. I think in the short term, all this stock noise kind of screwing retail investors and all of that will make CCIV a difficult one to invest in, because it's just it's a little bit tainted, and it's a speculative play at the moment. So thanks very much for that question there. I wish I had the discipline not to look at the stock price until mid-April, which I'm sure we will all be fine, Sandra. You can do that. You can turn it all off. Yes, you can do it. I know it's hard to do. I sometimes tell myself to do the same thing. And of course, I still look at it. I don't look at it anymore every sort of minute and second of the day, but certainly beginning and end of the day, I am a little bit of a, I can't put it down. So I sympathize with you there, Sandra. Let's talk about Apple. Yeah, it's funny, isn't it? I've got Apple on here. It's at 121. Yeah, I don't really know why Apple's getting huge volume. I mean, people are trading it, but it doesn't getting much coverage for some reason. Phil, very much. I appreciate your question, and that you got the answer. Thank you for your support, and it's also fantastic to see you on our Discord community over there. Funny, she says Lucid seems to be very good and convincing others that they are very good. It remains to be seen. I think the jury is still out. Danny is asking, should I unload all my NIO shares and hopes it dips more than buy back? I think, Danny, that really depends on your horizon. Are you someone who buys and sells every day and you sort of trade the momentum in the market, in which case it might be a fair strategy? Or are you someone who buys a stock because you fundamentally believe in the stock will outperform and deliver you good returns in sort of 10 years time, in which case you might want to rethink that one. Lily's saying, yeah, wow, Apple at 120. That is indeed something there. When was the last time we were at 120? Well, in December. Yeah, that's quite a sell-off, isn't it, really, if you think about it? Although they haven't rallied as much. I mean, this is, again, a more traditional company now with a big subscription business. So I'm starting to like it more and more, I must say. Hey folks, support the GOAT, says Gary Lau. And what he's talking about there is that every time you hit that like button, guys, I donate 1 cent to the Gentle Barn here, these lovely animal sanctuaries in the US. And we are up to, I think, about $260, $270 so far this month. Only 2 days to go, guys. So let's get to $300. It is very easy. All you got to do is click that thumbs up. And it does, of course, also help spread our channel and grow. So thank you very much for all your support. Ryan, good morning. X-Plan getting hit harder today. Do you think it's a lockup coming off, or do you think they're being perceived as less sexy and Tesla and NIO gets burned because it doesn't have halo? I suspect it is a little bit the long-term owners selling off, and we don't know that yet. Let me have a quick look over at Fintel, see if we can see if anybody's been selling off there and reported it yet. But I suspect there might be a little bit of that going on, that some of the bigger guys are selling off here. These are buyers. So hang on, is this XPeng? So XPeng also, HSBC also bought a massive position in XPeng. So they've just bought a massive position in NIO and now a massive position in XPeng. So they're going big into the EV sector. Now let's look at sales, because that's what we're talking about here. If you are, who is selling? BlackRock a little, but their value is still up, so that's not really much there. American Funds Insurance are selling off a little. Some more funds here. Matthews Asia, JP Morgan. We kind of knew that on the 19th. But if you look at institutional owners, I don't see any, from memory, I don't see any changes to this. But we have to have a wait there for the filings if we get any new Forms 13. I haven't seen them yet, but I suspect that, and just to explain that, the lockup period for XPeng expired on the 23rd, I think it was. So that means if you are a director or an original shareholder or a private equity fund, possibly from the IPO till the 23rd, you weren't able to sell or trade your shares. So typically when those lockup periods expire, you see a bit of a sell-off, because we had quite a sell-off yesterday and a sell-off today again. So that could well be why that is. Gary, thoughts about institutional money exiting Barber, Hillhouse, Point 70, etc. there? Yeah, absolutely. But one thing we can, of course, pull that up and see who's selling what there. Quite a lot of that news we're seeing is filings from Q4 2020. So people will have exited because the Ant IPO didn't happen. So almost what's more interesting is what's happening more recently. I always think, let's have a quick look at who's been selling more recently. So you have to always think about what's the time period. Is what I'm reading old news or new news? I hear Fintel's being a little bit slow, but it'll get us there in the end. Here we go. Let's sort that by date, if it'll let us. There we go. So what are we seeing here in Barber? We're seeing this Berkshire Focus Fund sold a bit. We're talking about earlier. They're buying NIO. Any of these major positions? HSBC sold a lot of Barber, 11 million shares yesterday, and they put that into NIO and XPeng. So that's kind of an interesting one to see. It's very, very interesting to follow these filings, I think. And then you see Bright House here selling a little bit, but that's 30,000. Not a huge amount there. So I don't think that's particularly a big deal. You're going back a little bit here. Schroeder, I think we talked about that. They sold 2 million shares there. But I don't see sort of a huge sell-off here. It's just, I think some of the headlines you get, you sort of see, Bill Gates sells Barber. Well, that's his filing from 2020. So he did that after he got the news about the Ant IPO not happening. So it's old news. It's priced in, I think. Ryan is looking for the buy signal on XPeng. Yeah, you're going to have to wait a little bit there for that. I also don't like catching falling knives. Tommy is asking, what's my favorite stock beside NIO to buy in the dip? I mean, at the moment, what I'm doing is I'm buying more defensive things. I'm buying more conservative things. I'm buying things like some value funds, and that might seem terribly boring, but I think at the moment, with valuations being relatively high, I kind of prefer to put more money into that, especially as I'm not getting these kind of buy triggers from the more sexy things. So I'm sitting a little bit on the sidelines at the moment with NIO XPeng till we see that bottoming out a little bit, and hopefully that'll be very soon. Hopefully at least these sort of $41, $42 ranges will continue to give us a strong support. I mean, really what would be nice to see is if we go down a little bit, go up a little bit, go down a little bit, and kind of reestablish some firmer support levels here that are north of where, north of sort of $45. Because at the moment, between where we are right now and sort of $54, there is kind of a bit of a momentum gap there. So it's quite hard for the stock to overcome that. Alibaba, someone's sharing here, so I just missed that. Bye-bye. Alibaba got an award for the government for helping to overcome poverty from the government. That's a sign of a buy-in. Look, there are news every single day on Alibaba that I think are positive, and there is a huge link between government and Alibaba in a positive sense. Alibaba serves all sorts of government agencies every single day, and they're signing contracts every day. Just look at Chinese news stories and type in Alibaba basically, and you see, I mean, literally every single day good news. But the market is still obsessed with the ant issue, so we need to make that go away. Is it a good time to buy NIO, says Hassan there? Well, I think it really depends on your risk appetite. At the moment, we're in a falling market, and we don't quite know how long it's going to fall. When should I buy the Palantir dip? Well, you probably don't want to listen to me on that, because I bought the Palantir dip at 28. I'm scratching my head. It's a little bit painful, but it's a long-term buy for me. I think really you need to ask yourself, is this something I want to have in 10 years and 20 years time? And if so, you can buy them when you want. Though cheaper is always better, or you might want to think about buying them more regularly at regular intervals, and that way you're kind of averaging out more. MACD is indicating buy on Tesla. Okay, let's have a quick look at that. I find that a little surprising. If you look at it on a day-by-day basis, no, it definitely doesn't. It's still a very much sell-off. If you go in very close on a sort of minute-by-minute basis, then yes. But it then also makes you trade incredibly often. So if you look at this, you've got a sell signal at 10:30, at 10:28, and you've got a buy signal at 10:35. So if you want to trade every 7 minutes, by all means, look at technical indicators on a minute basis. Otherwise, for myself, I look at it on a day-by-day basis. Desmond Chan is, don't try to catch that knife, my hands. Last day of the red. Hopefully we're going to see a turnaround. Will you do a session, Howard, on portfolio weighing? Absolutely, gladly. I'll gladly do something like, and we are talking about quite a few of those things, I think, over on the Discord yesterday as well, about doing a portfolio for the channel, and sort of looking at different ways of different strategy for self-investing. That could be technicals, and we'd be quite fun, I think, to do something like that. And I was just looking today at some automated ways of tracking technicals and doing buys and sells with that. That might be quite a laugh to share that with our community every day. And if you want to join that, guys, do join us on the Discord channel. You can get there through the Patreon link below. So we're going to set something like that up, where I am going to invest, say, in NIO every day if necessary, if the technicals tell me us to buy and tell us to sell. And we'll have a look at if that gives us a substantial outperformance versus just holding, or other valid strategies. So we'll do some things like that, and we can also do some polls on stocks we want to buy into those portfolios, etc. So lots of fun things to look forward to there that we're going to set up in the next couple of days, guys. So do come and join us on our Discord. It's a lovely community. The master here's thoughts on the Apple dip. Well, I like Apple. I think they are turning around from sort of a tech company to more of a subscription business. I like that a lot. I like all their content businesses, and they are, anything from Apple Music to films, all that sort of stuff. And they have a very loyal following, and that's sort of their moat, because they're sort of the phones that they're putting out. To me, that isn't really the issue anymore, because I think one phone's the same as the last one, more or less. But if they can get more and more revenue on a day-by-day basis, essentially from subscriptions, I think that's kind of the future there. And that would turn them into more of a Facebook type business, which becomes more of a defensive value play, rather than a sort of tech company that relies on reinventing the phone wheel every year, which I think is getting a little bit harder and harder. So I like the company. I mean, it is now back down to where we were, basically sort of 10th of December level. So that's kind of interesting, because the market has rallied a huge amount since then. They haven't been part of that rally quite as much. Let me just put up for you say the NASDAQ. Have we got it on here? Where's the NASDAQ? Here, US 100. And I'll make them, see, you can see in percentage terms. Can we see that? No. Yeah, actually, the movement has been relatively similar, hasn't it, really, from that point of view. But if we look at, where were we? Okay, we are on a, where is our crash? Here's our crash. So from that point onwards, has Apple outperformed the NASDAQ? Yes, they have. Apple is the colorful one. So they are coming a bit back down again. Now, in the very long run, Apple has, of course, always outperformed the Nasdaq massively. So the very fact that they are slowing down, you could look at it in two ways. You could think, well, their business model is a little bit old now. People find it less attractive. People find it less sexy. Or you could think this is the buying opportunity of all buying opportunities because we are coming back down. Look, they're underperforming the Nasdaq here of late. Let's see if they are doing so. And this is just 2021. So there's an underperforming the Nasdaq here, which is unusual for Apple. So that's kind of an interesting one. Thanks very much for that question there. Thoughts on IBM, 6.5% dividend? Yeah, I think that about sums it up for me, Joe. I think it's a good dividend play. I don't think they're going to go anywhere. I don't think they're going to go out of business. So I think it's a good dividend play. 6.5% is pretty attractive. Now, is it going to lose value over time? Well, we can pull IBM up here quickly, and that's it, right? IBM, and see what that's been doing. So IBM here is the colorful one below, and Nasdaq is at the top. Now, let me get rid of the Nasdaq here for a second. It has not been a great performer, right? So had you bought that at the beginning of 2020, you would have bought that at 137, and we are now, let me get rid of the percentages, we are now at 120. So pretty miserable year considering what the market has done. And if you bought it at the bottom of the crash, okay, you'd be up 20%. But so, you know, that's why they're paying a dividend. They need to incentivize people to hold the stock. Kevin moved some NIO into Apple. Well, that was a smart move. Thanks for sharing that, Kevin. Look at NVIDIA. Well, NVIDIA seems to be benefiting quite a lot from the EV sector also, right? We saw on the earnings call with Lee yesterday that Lee is also going to use NVIDIA there. It seems that they are the masters that might really benefit from autonomous driving there with their super chips. So yeah, NVIDIA has had also a bit of a sell-off here, but they are recovering. So they are kind of back on this kind of horizontal pattern here. So yeah, I think it's a good company. The valuations are somewhat lofty at the moment because they're basically part of the EV trend. LT, thank you very much. Appreciate your kind words there. Disney, look, I like Disney. I mean, Disney has a problem. It's debt. The COVID will go away. I don't think that's an issue. What I like about Disney is that they managed to acquire 35 million subscribers like in a week or something. Insane. And COVID, of course, has helped them there. If you've got screaming kids at home and you can subscribe to Disney, people probably will. So that kind of gives them a future outside of their sort of debt-ridden world where Disney's kind of been in. So I think I'm relatively positive on Disney. And crypto mining there on NVIDIA, of course, also Flame Lane. Thank you very much for sharing that, guys. Guys, I'm going to have to wrap this up here. I really appreciate you all tuning in. We've got 2 videos coming out, more details from NIO on the deal with Sinopec. And I'm also putting out a video very shortly today on things you can buy that will go up to 9 times in terms of a crash. So some sort of proactive, positive cash funding stuff that actually really goes up a lot more than your portfolio will go down by. So do check those out, guys. If you haven't subscribed yet, if you're not yet on our Discord channel, do join us. Just click on the Patreon link below. That gets you there. A lot of our community is on there. Thanks everyone for joining, especially to our members, of course. Howard, thank you very much. Desmond was on here. Gary was on here. Quite a lot of our members. I'm sure I've missed some of you. Apologies if I have. Philco, of course. Appreciate all your support, guys. Appreciate you taking us over 12,000 subscribers. So keep liking, sharing, and subscribing. It makes our community better and funner, if that's a word. So thanks for tuning in, guys.